Ladies and gentlemen, boys and girls from all over the world, my name is Brandon, aka Rags Riches. Don't know why you're here. As always, a quick reminder.
Rags to Riches. Do not like, comment, or subscribe.
Nice to have you here in chat, ladies and gentlemen. I mean, here we are in the throes of a bear market and you're still showing up. We got some high energy in here. Facing reality. Numero uno, can you believe it? Cryptomance.pls Rags. Did you see that crypto scam video from James Janney? No, I haven't. I know some of these content creators are really reaching right now for anything that they can say or do to get some views. So let's see what happens here. Taryn, what is up? Hookshot, what's up, my man? Nice to have you here in chat. Taryn says, I'll catch the replay. Marcus99, what up, all? Expanded, good morning. Sam, I am. Hola, Tybull. Good morning, fam. Agenda 69. Howdy, folks. Roof Dog, let's go. Bam, FM7. New channel to unsubscribe from. Thank you, friend. Thank you, thank you. Chartzard. Yo. Show us that bald head, man. That hair's growing back. Growing back a little bit. I think I'm going to keep shaving it, though, dude. I actually like it. I always have. It's easier. I don't have to deal with stuff. It's like I got 20 t-shirts, all the same color. No decisions made in the morning. That's how easy it is. Sam, I am in the house. Mo digging it. Good morning, Rags and fam. Guys, let me know if that background music's too loud or if it's good. Sam Kemp, am I going to see you and CHB in Austin on the 10th? Maybe CHB. I think I got to be, I'm traveling around a little bit. Francis Powell, hello. Oh, hello, fam. Pulse Chain Trader. Yep, let's make 2023 a great one. Accumulate and hodl. Nate Stakes in the house with 5 fireballs. HOA, great day to be alive. Table. Chad D to the power 13, Beard Sate, Shamrocks, and Bruce. Yeah. So we're going to go over some cool stuff today. I'm going to try to provide like value. Going to try to provide like logic. Give you guys some things to look at. Some things to consider. And I'm going to kind of tell you what my general strategy is for, really, I guess it's foundationally for cryptocurrency, generally speaking. And we kind of know that getting into the beginning is probably the most important part. We know that. Okay, so I'm going to break down some charts and kind of show you guys some patterns that I've noticed as I've been in crypto over the years and kind of how I approach things. Hello, Brandon. Thank you for the stream. Yep. All right. So I guess the first thing that we can do here, let's just take a look at the charts because that's what we do here. Do it. I don't want to do that one. Yeah, we'll go here. Share screen. All right. Let's go up to, actually, let's go down to, where's BLX? There it is. Brave New Coin Liquid Index for Bitcoin. All right, so what's happening here? Well, we kind of talked about this last week. I said based on the trend from our top back in November of 21, and based on the macroeconomic conditions, the heavy weight that the Federal Reserve is placing not only on the United States economy, but really the rest of the economy in the entire world. You know, if we continue down this trend and nothing changes, the Federal Reserve, they don't stop taking money out, you know, which was kind of like what I would like to see. Maybe the Fed stops taking money out of the economy. Maybe the Federal Reserve stops decreasing interest rates. I don't really think all of that's going to happen at least until June of this year. So with that said, we've got some major levels to contend with here. 13.9, about 14,000 for Bitcoin, underneath about, I don't know, 11,000, 12,000 range, and then probably about 9,000. So under 10. I'd expect that we start seeing that potentially May, June timeframe. We'll see what happens. We'll check it out. Don't know, but that's kind of where we're at right now. We've kind of chopped sideways for a while. These little areas of distribution of supply, let me kind of go back and just take a look here. They tend to last probably about 40 to 80 days. And right now at this current level, we're sitting right at about 60. So, you know, we'll kind of see what happens here. We're definitely interacting with this trend line that's been established. We could very well see things get kind of weird here pretty soon. But I don't see any fundamental reason to think that the crypto markets at large are going to do anything special right now. The plumber speaks. Howdy, Rags. What's up? D to the power 13. Laugh my ass off. Only music respecters in the chat, fam. Hey, Rags. I watch all your streams, but never get to see you live. Appreciate what you're all about. Yeah, Moon Mutt. Outstanding. Nice to have you in here. Mr. Rafferty in the house. Good golly, Miss Molly. Mr. Rafferty, he got a Texan shirt in the mail today, man. You would talk about a big bastard, man. I might show you in a second. Might show you. All right. Let's kind of get into this. I don't want to waste your time. We're about 7 minutes in. Actually, you know what? No, I got to do it. I got to do it. I got to do it, folks. I got to show you guys the friggin' bowling ball here. Let's see if it shows. Does it show up? No, I think it'll show up. I'll have to think about that. I gotta think about it for a second. We'll get in here though. I'll show you the big bass in a minute. I'm gonna save this. Save as. We'll go to picturas. I'm gonna show you, Mr. Rafferty. You cool with that, Mr. Rafferty? I'll show him. Viber Finance CEO says we all gonna make it. We ain't gonna make it. What are you talking about, Willis? All right, let's talk about this. All right. So everybody kind of wants to know, like, when is the best time to get into any cryptocurrency? This is my strategy that I've been talking about for a while. I've never really gone over it in depth. I just kind of talk about it on stream sometimes. So in my opinion, financial opinion, okay, not financial advice. This is just what I do. And I don't suggest you do it. I suggest you consult a financial advisor of some sort. The first thing that I do is research. If it's a brand new cryptocurrency, the first thing I'm going to do is kind of research it. It's important to thoroughly research the cryptocurrency that you're considering investing in. And this includes, what do we say? Understanding the technology behind it, what type of technology we got, the team behind it. Typically, you want to look for people that are doxed. You want to look for people that have been around. You want to look for people that have good track records. In a perfect world, you're going to look for people that haven't flip-flopped between many projects. And that's in a perfect world. And guys, by the way, this isn't always like black and white. This isn't always 100%. These are just general guidelines that I go by personally. And you got to look at the risks and rewards. You got to understand what it does. You got to understand how it operates, things of that nature. So what have I noticed? I have noticed in the cryptocurrency world, especially if there's any sort of pre-sale prior, you've seen this a lot, or any type of allocation prior, the first 60 to 100 days is the most important time for gains in many cryptocurrencies. Not all, but many. Okay? So I'm going to kind of show you what I'm talking about. Let's take something that we all know here. And we all know Hex, right? This is the Hex chart. This is UniSwap V1, so it goes all the way back. All right. Let's take a look at this. So if we go back in time here, we go back in time to, December of 2019. What are we going to see? Well, we see that there is a sell-off followed by a pump. Now, what's the pattern that we're going to look for here? From that opening price, when do we get back to that opening price? How many days? It was about 60 days. 60 days to get back to that open price. So Hex opened up, Hex sold off, it found a bottom, and then it returned to that opening price about 60 days later. Now it went back after that, but here's the important thing. That first 60 days, and really, I think I can hold shift here, right? Yeah. For about 20 or 30 days, it took 30 days, 20 to 30 days for Hex to find its bottom. So what's the thing here what's the thing we need to learn here? Well, we need to learn this. If we had gone all in and aped in on day one, then for the next really 60 to 90 days, we wouldn't have had any powder to participate, right? we wouldn't have any powder to participate in those lower lows. Now, why is that important? Well, I'm going to tell you why that's important. Let me reset the chart here. We'll go to this. All right. So let's go from opening price to all-time high for Hex. Opening price to all-time high was about a 1,758x. 1,758. So if you got in, that's about where you are now. 1,758 all-time high. We can also do this to make it more applicable to our current situation. Opening price to current levels, you're at about a 60x. So if you got in on day one, you didn't do anything else, you're 60x up. Now, what if you had waited about, maybe you put a little bit on day one and you put a little bit on day 10 in the middle of that downtrend. See if you guys can see it here. So we'll measure that. So the middle of day one, or the middle of that downtrend, so day 10 or so to where we are now, you're at 113x. If you waited about 10 days, you'd be at a 113x, 115x instead of a 60. All right. Now, what if you'd waited 15 days, or you got some money in 15 days? Whatever money that you put in at that point in time to today, instead of a 115x, you would have been a 177x. All right. Okay, so then let's say that you had a plan and you stuck to it and you rode this all the way to the bottom. So it bottomed out. So if you had put money in that entire time, instead of a 60x, instead of a 115x, instead of 170 or 80x, you'd be sitting in a 261x on that money. Okay, 261x. So day 20 through 26, Mudhog says. Let me see. Let's do it. Yeah. So that's the point. You guys see how much different? That's like a 60 times 4. That's almost like a 3.5 to 4x difference if you had gotten in at the very bottom. All right. Now I'm going to show you some more here. I'm going to show you some stuff that you may or may not be familiar with. This is UniSwap. All right. We're going to kind of, again, notice some patterns that are occurring here. These beginning charts, they move significantly in about 90-day chunks. Now, sometimes it's 110 days, sometimes it's 80 days, but right around 90 to 100 days, I'd say it's important to pay attention here. If we take the top here for UniSwap, when UniSwap launched, you had about a 60-day sell-off. Okay, so we've established some sort of pattern, very similar with Hex. All right, so if we go on out to the point at which price returned to the opening price, that was about 115 days. Okay, so just like we said, these things run in about 60 to 90 days, sometimes a little bit more. But the point here is, if you invested all your money at the top here, you would have no dry powder to catch some of these lower lows. So we're going to go from all-time high. We'll go from opening price to all-time high for UniSwap. Now, I know that there was like pre-allocations and there was a lot of supply that went out, this and that. But we're just going to take the raw chart data here. If you had done that, if you got in on day one, you're at about a 4x. All right. If you did nothing else, you're at a 4x. Now, what if you were able to catch the bottom, the money that you put in at the bottom there, you'd be a 23x. That's almost a 6x difference, folks. So that's a really, really big thing. So what can we establish from this? And let's keep going here. Let's just take Asic, for example, because Asic just launched. This is a good little thing to do here. A good little exercise. All right, let's say opening price to when it returned. Look at that. It's about 60 days. It was actually, 55 days to 63 days in that period. So what did it do that entire time? Well, it sold off. Sold off. Now, let's take from now to all-time high. If you got in right now to where it is to all-time high, you would be at about a 1.3x. if you had waited about 1, 2, 3, 4, 5, 6, like 30 days, 20 or 30 days, you would be at a 2.3x. Okay, now if you had waited, what is this about? Let's see, make sure. You wait about 40 days and you put some money in. The money that you put in at day 40 to the all-time high, again, you'd be at about a 3.4x, 3.5x. And if you had managed to time the bottom or get anywhere close to the bottom on that wick, you would be at a 4x. Okay? So think about this. When you're buying at the top, in terms of multipliers, in terms of x's, think about it this way. You know, you might, from day one price to the top, you might be at about a 1x. Okay? However, if you wait 50% of that downtrend, which typically lasts, like we said, like 60 to 90 days, 60 to 100 days, sometimes more, sometimes a little bit less, but that's the sweet spot. Every single time you buy, you're increasing your average return by about 50%. Okay, through that entire period, through all those days split up evenly. So what can I learn from this? What I'm learning from this, and what I've done with many projects, is I don't go all in on day one. All right, sometimes, rarely, you will see a project open up and rip to the upside, and it never comes back to those levels. That's rare. But that's also the reason why I personally, I put money in on day one, just in case it rips and never comes back. But in any case, what's a good strategy kind of overall? So here's some steps, some logical steps, things that you can do to kind of save yourself and max things out. Because guys, let's face it, we're not prophets. We are not prophets here, right? We don't really know what's going to happen. All we can do is create a plan and stick to the plan. Because our plan allows us not to act emotionally. Emotions are what destroys us. Emotions are what destroys people in bear markets, especially. And emotions are what destroys people when projects first open up, because they're trying to time stuff. All right. So what is dollar cost averaging? A lot of you guys know this. Dollar cost averaging it's an investment strategy that involves investing a fixed amount of money at regular intervals, regardless of the price of the investment. And this can be a useful strategy when you're investing in a stock or in a cryptocurrency that is just launched, as it can mitigate the risk of investing a large sum of money all at once. All right, so to dollar cost average when a crypto first launches, you might want to follow these steps. These are the steps that I follow. Again, you know, I'm nobody. I barely graduated high school. You shouldn't listen to me. Shouldn't listen to me at all. Determine your investment budget. So that's what I do first. I'm going to determine how much money that I want to spend. How much money am I willing to be able to invest in the cryptocurrency, and divide that amount by the number of intervals that you want to invest at. So for example, let's say we're taking this chart here. Okay, so this chart is what, the ASIC chart, for example. It had just launched. So I'm day one. What am I going to do here? Well, what I'm going to do is I'm going to take a budget. Let's just say I want to invest $1,000 over the next 90 days, because that's my sweet spot, right? So I take $1,000 over 90 days, and I want to invest in intervals of every week. So you would invest roughly $80 a week for 14 weeks. 90 days is about 90 days is 14.2 weeks. And you would divide that by your budget, which is $1,000. So you get about $80 a week for 14 weeks. You're going to stagger in. So that's how that would work. Everybody says DCA is important, but guys, DCA, in my opinion, what I have seen and what I have actually done and executed, DCA is most important at the very beginning of a cryptocurrency, because that is the safest place to be. It is not no risk. It is not zero risk, but it's the safest place to be at the very beginning. And if you want to max it out, DCA is an incredible tool for the first 90 to 100 days, in my opinion. Do not ape in on day one. I don't ape in on day one. Stagger your buys weekly or bi-weekly. And it's important to note that, like I said, dollar cost averaging does not guarantee a profit and it doesn't protect against a loss either. It's just a way to reduce your risk of investing a large sum of money and getting caught at the top for 100 days or something. And as with any investment, it's important you got to consider your risk tolerance, right? That's why we have a plan. That's why we come up with a budget. Figure out an amount of money that's not going to break you. Figure out an amount of money that you're not going to want back in 100 days that you can forget about, right? So that's important. So what are we really trying to do here? What do the smart investors do? The smart investors get in when it's dirt cheap, and then they use all the retail people that come in during a bull market as exit liquidity. And they're chilling. How can I prove that? How can I prove that? Let me prove it. I could prove it a variety of ways, and most of you guys have seen these. But we'll just kind of go simple here. All right. These are some big whales in Bitcoin. What type of pattern do you see here? So let's go to the 2018 run up. So really 2015 to like 2018. All right, so what do we see here? We see that the addresses with 1,000 Bitcoin or more, they surge during a bear market. And then what do? They decrease as price is spiking. Why? Because as price is going up, they're getting out. They're using retail as exit liquidity. You want to be on the winning side of that. You want to follow what they're doing. All right. And you can kind of look at this through the entire history. It's actually, it's kind of wild looking here. So you can see it here. Bitcoin wallets are going up. They're in a bear market. After this peak, you notice that the wallet sizes are inversely proportional to the price because they're getting out as price goes up. Getting out, and they're completely out. Why? Because if they can get completely out, then they can start buying the bottom again, which is exactly what they do. Price bottoms out, these wallets start to pick back up again. Price starts going back up, the wallets start getting out again. Over and over and over and over. Pretty simple stuff here, folks. Pretty simple stuff. So if I'm going to summarize this real quick, we'll just kind of go over a quick summary. We're good. We're about 25 minutes in. That's nice. Nothing crazy. All right. Research your cryptocurrency. It's important to thoroughly research the cryptocurrency you're considering investing in. This includes understanding the technology behind it, the team behind the project, and the potential risks and rewards of the investment. We want to use dollar cost averaging. Why do we want to use dollar cost averaging? Because as evidence, we'll just take the hex chart again, just to summarize here. And this is a pattern that is quite prevalent. 60 to 90 day dump. Well, actually, it's probably about a 30 to 50 day dump, and then price comes back in about 60 to 90 days to that opening point. So instead of going all in at the very beginning, the first day, come up with a plan. Say over the next 90 to 100 days, I'm going to spend X amount of money. Divide that amount of money by the time intervals that you want to invest in. It's that simple. All these speculators, they're going to dump on your head. But what's important about that? They're dumping and you're picking it back up all the way down. Dumping, picking it back up all the way down. Let's take another chart to kind of try to prove this out. Let's take Hedron. This is a beautiful example in my opinion. Look at this. Opening price to that bottom, that was about 100 days. All right, so if you bought here, you bought open price, it dumped, it pumped back up, but then you kept buying down, buying down, buying down, buying down. If you're one of those fortunate people to get anywhere close to the bottom, let's just say it's not at the bottom, but guys, I'll tell you this, if you're on a weekly DCA schedule, this bottom was created with about 1, 2, 3, 4, 5, 6, 7, about eight candles, 8 days worth. So chances are you would have put 70 or 80 bucks in there if you're at 1,000. From there to the top here, from that all-time high, you're looking at about a 32x on your money. That's not bad, right? So 32x times, let's say you put $80 in. So you had a $2,560 if you had just caught the bottom with one of those DCAs, as compared to going all in at the very top here. And your $1,000 is stuck and you're down 90%. What was this? Went like down 97%. You have $3. You made all that back and quite a bit more. Not only that, every single time price passed that point that you DCA'd prior, you're just in profit, in profit, in profit. So you guys see the importance of this. You got to be smart. You got to be level-headed. You have to have long time frames. You got to have long time frames. Okay. Yeah. So Red Squirrel says Icosa has an interesting chart. This is this is important. Let's check Icosa. This doesn't, like I said before, this does not automatically assume that you're going to be successful with this. Icosa it's a complicated contract, okay? Because you're not just dealing with Icosa. You're dealing with, you're dealing with pressures from Hex. You're dealing with Hedron. You're dealing with HSIs. You're dealing with auctions. So that's why I said it's important to understand the technology or the project that you're investing in. Okay, so these rules don't always apply. However, you would still be better off DCAing with Icosa. If you had hit day one, all right. What's the hotkey for this? Oh, cool. Shift. Oh, that didn't work. So day one, and then let's say you hit day 5. And then let's say you hit day 10, you're decreasing your average cost. If you'd gone all in at the top and you had blown all your dry powder, you'd be in a much worse position. I don't think there's any doubt in anybody's mind that Icosa and Hedron and just everything pumps in a bull market. So you got to have these long time horizons, guys, long time frames. But Hedron's a good example of this too. So I guess I told you guys in the beginning, these cryptocurrencies, because there's not a massive amount of liquidity, it's easy to turn the ship one way or the other. They pretty much live in about 90 to 100 day chunks. First 90 to 100 day chunk, we found our bottom, so top to bottom. The next 90 day chunk, we found our local top. It's about 80 days. All right. Now, what are we at right now? Well, we're inching up on that again. We're right at 100 days. We're hitting a major line of support. So what we would expect that there's some big moves. So imagine these 90-day chunks. In the beginning is little tiny stories that are being told. And that's what we got. Let me check chat here. Checking chat. Red Squirrel, oi oi, Kinetics in the house. What is up, my man? Now guys, I think is it E2 Syndicate? E2 Syndicate, is that your new YouTube channel, Kinetics? I think he launched it on January 1st. So Kinetics launched a new channel. Check it out on YouTube. I believe it's E2 Syndicate. Mudhog Due Day, yeah, we talked about that. Max Statica, what is up? Yeah, and he had Rich Dad. He had Robert Kiyosaki on. That was really, really cool. Kinetics, Chad, my boy. Immutable, yo, what's up, dude? Yeah, Oyster and Larson, DCA. First 90 days, guys. First 90 days. Come up with a plan and stick to it. It's not a guarantee. However, you will decrease your risk by DCAing in the first 90 days. You just will. You could pull up 100 charts. And here's the thing. When you do get involved on day one, if it does rip to the upside and never comes back, that feels good for you too. It's like you caught the bottom. So that's what we're saying here. Thank you, CGC. Sup, Kinetics, Red Squirrel, Shamrocks. What is up, Kinetics? Great to see you, dude. Freddy Quotes in the house. Red Squirrel, hi, Shamrocks. Jay Benny, what's happening, B? Rick Davis, just catching up. Afternoon, Rags. Afternoon, dude. You must be over the pond there, dude. Afternoon, man. It's like 10:30 here. Steak and Bake JDB was Red Squirrel. So this is financial advice. No, this is pattern recognition. This is not financial advice. This is pattern recognition. Financial opinion. Well said, Sam. Buy low, sell high. Simple concept. Rags told me to buy. Damn it, Red Squirrel, get out of here. Great transition. Day one did about 0.4 ETH. Icosa has an interesting chart at the moment. Rags dropping knowledge. E3. Yeah, I'm gonna pull it up here for you, buddy. Let's do this. E3. I'm gonna turn the music up.
Welcome.
Whoa. All right, guys. All right, here it is, folks. E3 Syndicate. It's at E-3 Syndicate, 215 subs. Capitalism versus communism. Robert Kiyosaki. Kinetics pulling in the big fish here. He broke YouTube. He said, brand new YouTube channel. You already got Robert. Good golly, Miss Molly. That's some crazy stuff. So yeah, that's good. Good stuff. We need more surface area. We need more surface area. Briz, you were on fire last night. Crypto Gains Club 369. Morning bugs. ASIC bull flag breakout. Yo, high rag's been DCAing since last summer. Yeah. Yep. And right now, guys, the time is now, I would say. In my little ginger opinion. You know, I said that Hex could be at about underneath a penny by May or June. I think Bitcoin can be underneath about 10,000 by May or June as well. So I think that we're finding our actual floors here. I think we're going to be seeing that. All right, ladies and gentlemen, boys and girls from all over the world. 34 minutes in, nice and simple, nice and easy. Go about your day. Guys, take a look at this. Share this video with people that you think might need to see it if they're considering getting into something. In my opinion, being in the first 90 days is the absolute safest place to be in cryptocurrency. Because if that thing drops, but then pumps a 30x and corrects back down 15, you're still good, man. You're still golden. You're solid. It's the best hedge against risk, in my opinion. So good stuff. Texan was mentioned in the episode. Kinetic says, thanks, Sam. The kind people of this community have been super generous with their comments. Yeah, guys, Matt and I are super stoked about Texan. We're just super stoked to go on this journey with you guys, and also, you know, the work is just now starting, right? We can't stop here. We got to make it a point to talk to people. All right, don't try to sell them. Just give them the facts and let them make their own decisions. Showing somebody a chart is probably one of the easiest ways to talk to people about crypto. So, your boy Rags is out. Make sure you don't forget this.
Rags to riches. Do not like, comment, or subscribe.
Peace out, homies.